Hi friends, it is not a clickbait video. It is an extremely important video if you care about your own wealth, your own portfolio and care about the power of Indian currency rupee at global level. I want to start this video by looking at this chart. So 1st of January 2015, $1 used to equal at around 63 rupees. Fast forward to 10 years, 1st of January 2025, $1 is now equal to around 86 rupees. Our currency has got weaker by almost 36% in the last 10 years. On a compounded yearly basis, in the last 10 years, rupee has been consistently falling at around 3.16% every year. Now, I'm not a politician who will blame BJP government because BJP government has been in the ruling in the last 10 years, because I saw a Congress person blaming BJP government because apparently when Congress was ruling, BJP was doing exactly the same thing. So let the political parties fight out on who is to blame when it comes to the falling power of rupee. It has nothing to do with me, but what I am concerned about is the wealth of common man of India, common people of India, people like you and me, because we need to understand that depreciating rupee, collapsing rupee in power has got a direct impact on people like you and me. So in this video, I'm going to break down two very big impacts from a macro perspective that is there on our portfolios, on our wealth. And it is going to be an extremely important video. If you're new to my channel, don't yet subscribe to this channel. Please watch this video without skipping. And I'm pretty sure with the learnings that you're going to gain, you're not only going to like this video, you're also going to become a lifetime subscriber of this channel. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that background, let's get this video cracking. I want to first explain to you the exact impact falling rupee has on you as an individual. The first big impact rupee depreciation will have on you is on your stock market or your portfolio. Whether you invest in stocks or mutual funds or ETFs, as long as the underlying assets are stocks, you are going to get directly hit because of rupee depreciation. Let me now back it up with some data. Have a look at my screen and you will see how the US dollar and INR has behaved in the last 10 years, and I've overlaid Nifty 50 returns in every year from the last 10 years. A lot of effort has gone into plotting this particular chart here, but what you will quickly note is two very important, extremely important patterns here. First pattern is that whenever rupee has depreciated sharply, meaning US dollar has appreciated sharply, our Nifty 50 has not given good returns. And let me now prove some of that. In 2015, if you see here, rupee depreciated very sharply, US dollar appreciated sharply. Our Nifty 50 in 2015 gave us -4% returns. Another example in 2018, again very sharp movement. Please note the stress on sharp movement here. Very sharp appreciation of US dollars. We only got 3% returns from Nifty 50. Another year, I'll give you example 2022 here. Indian rupee depreciated sharply again and Nifty 50 only delivered 4.3% returns. Point is very simple. Whenever in the last 10 years, rupee has sharply depreciated, Nifty 50 has not managed to deliver good returns. The second important observation that you will note is whenever rupee has appreciated sharply or at least have maintained the US dollar balance, what has happened is our stock market has blossomed. Again, for example, have a look at in 2017. Here rupee actually appreciated in power against US dollars and our stock market gave 28% returns. Have a look at, for example, in 2019, rupee appreciated, we got double-digit returns, 12% returns. In 2020, during COVID, rupee appreciated, we got 14.9% returns. Look at 2021, when rupee and US dollar was stable, we got 24% returns. When in 2023, rupee and US dollar was almost stable, we got 19% returns. So as long as rupee does not depreciate, our stock market gives good returns. But the moment rupee starts to depreciate sharply, we have seen in the past that our stock market does not give us good returns. And if you have your money invested in stock market, either in the mutual funds, you need to really understand this trend because your portfolio might take a hit because of this particular concept. Of course, stock market does not depend on one parameter, but past tells us that this parameter has heavily influenced stock market behavior. Now comes the natural question, what is happening right now? So if you look at the last 4 months, October 2024, November 2024, December 2024 and January 2025, rupee has been depreciating again at a very fast speed. You can see these 4 candles here. These are monthly candles, October, November, December, January. This is because in the month of November, Donald Trump was elected as the US president, and this guy is all for America. He wants to make sure that America remains number 1 economy in the world. US dollar remains the strongest currency and the only currency that the world is trading on. Now comes the billion-dollar question you may have, that Rahul, can rupee actually go down and $1 can become 100 rupees? Can rupee depreciate to 100 rupees level? Is it possible? It is entirely possible. Nothing is impossible in this world, but it entirely depends on 2 critical factors that you need to understand. Please do not drop out from this video. If you've been with me so far, please try to understand this concept as well. So the first factor here is that what is going to be the tariffs that Donald Trump may impose on India. Just 2 days back, it was in the news that Trump may impose almost 100% tariffs on BRICS nations. Now let's understand this important concept. So BRICS nation, we all know it's a group of 10 countries that are on your list. So just a background here, that these 10 countries, whenever they do any bilateral import and export sort of a trade, they always deal in US dollars, because US dollars is a common currency of the world. But what has been out there in the media as an speculation is that these 10 countries as part of the BRICS group may come up with their own common currency to trade between these 10 countries, meaning they want to de-dollarize the world, meaning they no longer want to have dependency on US dollar. They might come up with one common currency that these BRICS nations can use. So none of the BRICS nations have ever confirmed this. As far as my knowledge goes, it has been out there in speculations in the media and whatnot. And if this happens, it's definitely not in the favor of US dollars, because the world will get de-dollarized, and Donald Trump, of course, being an American, doesn't like it, and he's saying that if any of the BRICS nation does it, then he's going to import 100% tariffs on products that are going to US from these countries. So for example, if India is sending any product to US, then India will face 100% import tariff, meaning if the price of that Indian product is 100 rupees, by the time it goes to the US consumers, it is going to become 200 rupees because of 100% tariffs. Now when the Indian products become so costly in US, then nobody is going to buy those products in US. As a result, our exports to US will come down. And just to present you some data, in FY24, our trade surplus with US was almost 36.8 billion US dollars, meaning between India and US is the country that is importing more and more products from India. Therefore, we heavily rely on exporting products to US. And the moment higher tariffs are imposed on India, what is likely to happen? Indian products will become costly in US. Inflation in US will go up. As a result, our exports will come down, and as a result, rupee will depreciate. Why will rupee depreciate? Rupee will depreciate because US companies will stop buying INR, because they no longer need to pay to Indian companies who are sending the products to US, because that export will come down. And as a result, rupee will depreciate more. It can definitely go down to 100 rupees, 105, but it all depends on the second factor, which is how does RBI intervene? I am hopeful, I am optimistic that RBI will not let rupee fall to 100 rupees of level. It is going to be a chaotic situation for Indian economy. But how does RBI control it? Let me explain to you. So RBI holds US dollar reserves. And this is the chart of the foreign exchange reserves that RBI holds in the last 2 years. And what you will quickly note is that in the last 4 months, from September, October onwards, RBI has been buying rupees from the market and selling the dollars, reducing its foreign exchange. Why? Because it does not want rupees demand to go down so that rupee does not depreciate faster. In fact, RBI has done an excellent job to not rupee depreciate far more than what other Asian currencies has seen in the last 4 months, because we were sitting on all-time high US dollars as reserves. RBI started to sell dollars, buy the Indian rupees from the market so that Indian rupees demand remain intact and it does not fall sharply. In spite of RBI's interventions, rupee has been depreciating sharply. Now, I don't know whether it can depreciate further more or not. I cannot speculate here. But for me, these are the 2 factors. One is the import tariffs that Donald Trump may impose on India. We'll come to know that in the next few months maybe. And secondly, how RBI deals with this situation. They have done wonderfully well in the last few months. Again, I'm not a politician here. Don't think that I'm speaking about a particular government here. I'm talking about the RBI's policy. In my view, they have done a jolly good job to ensure that rupee does not depreciate sharply. And to be honest, I do not know the future, but if you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. Also, you can consider joining my YouTube member community. I share a lot of detailed insights about mutual funds, stocks, ETFs, macro factors, overall market situations, a lot of insights that will practically make you a better investor, smart investor over a long period of time. The feedback of this community has been excellent. Simply go to my channel, press on join button, or you can find the link in the description or in the pinned comments. The second big impact depreciation of rupee brings directly to you is imported inflation, an extremely important concept. Imported inflation. If you do not know this, allow me 2 to 3 minutes of time and you're going to understand with an example. So first point is that India is a net importing company. So if you look at the data in FY24, we did almost $854 billion worth of import, and we did export of around $776 billion US, meaning the total balance, if you see, we did more import than the export, and it came out to be around $78 billion US of total trade deficit we had in FY 2024. What does it mean? That we are importing more and more products from outside the world. What does that mean? Now let me take a very simple example. These are some numbers that I'm going to make up now. So let's say in 2023, 1 liter of oil used to be $1 US, and at that time $1 US equals to be 100 rupees in terms of the Indian rupees. So that was the situation in 2023. So if an oil company that is importing oil, let's say from US into India, what they will do, they will have to shell down 100 rupees to get that 1 liter of oil. Now fast forward to 2027, let's say 3 years down the line, if rupee depreciate by 5% every year, what happens is $1 US becomes now 115 rupees. The same oil company now will have to shell down 115 rupees to buy that 1 liter of oil, meaning that their input cost has gone up now. Their buying cost has gone up now, meaning that 150 rupees is what they will spend to buy 1 liter of oil. Now imagine this oil company is now giving oil as a raw material to, let's say, paint companies like Asian Paints, Narrowlook, etc. What will happen? Asian Paint's input cost will go up, and therefore Asian Paint is not going to pay this from their own pocket. They will increase the prices of paint, as simple as that. And people, you and me who are buying Asian Paints, for example, we will have to pay more money to be able to buy the paint. That is what is called imported inflation. So every product that we are importing, they will become costly in India because the rupee has depreciated. And as a result, if that product is also used as an input material to any other factory or manufacturing process, that manufacturing product will also get costlier. And therefore, what we are seeing right now is high inflation in India, particularly in the last 3 to 4 months. Why? Mainly because rupee has depreciated, our imports have become costly. Therefore, there is an inflation pressure right now in India and things are getting costly. Ultimately, directly, it will hit your pocket. Forget about taxes, forget about GST. They are also all-time high. I really hope, sincerely hope, we get some relief in the budget. But the point is very simple. Rupee depreciating has direct impact on you in terms of things getting costlier, and at least you need to plan for it, if not much. Now you may say that, Rahul, okay, this we understood and now you have thrown a problem into the spanner, but what about the solution? Why are you not speaking about solutions? So I can't really fix the problems that we are seeing in terms of the rupee depreciation, but as an investor, I got alerted and I started to read up more about the concepts that we need to implement in our portfolios to be able to protect our wealth. One such important concept is a concept called dollar hedge. Have a look at my screen and allow me 2 minutes of time. You're going to understand this concept as well. What does this concept say? It says that you need to protect your portfolio by doing the dollar hedge. If you look at the data, Nasdaq 100 index, which is the Nasdaq 100 is an index in US, I hope you know that. In terms of INR versus USD, INR has performed much better in the past 10 to 15 years, mainly because rupee has been depreciating. So the green line that you see is Nasdaq 100 TR index return in INR versus the USD. The both indexes are exactly the same. The only the difference is the currency. What you will note here in 2012, for example, if an American investor invested in Nasdaq 100 index, in USD they would have got 15.6% return. But if an Indian investor invested in Nasdaq 100 index in INR, they would have got 19.1% returns. Why? 4% more because of depreciation in the rupee value. And across the years, you will find very consistent pattern here. In 2018, for example, American people lost money, minus 1.4% return by Nasdaq 100. Indian people got 7.6% better returns because of depreciation of rupee. Now you may say that, Rahul, we don't know whether rupee will continue to depreciate or not. Absolutely. I also don't know, because it all depends on multiple factors. As I said, how RBI tackles the Indian rupee depreciation problem, what happens to the import tariffs, and many other factors. But the point is that we might need to think about doing the hedging in our portfolio. It might be 10%, 20%, depending on your ability to do research about the US market. But investing in US market, diversifying 10%, 20%, 30%, whatever makes sense for you, in my view, is a good move right now, because in the next 5 years, Trump is going to do a lot of things in US. He's going to look at America as the first thing, and therefore US dollar, in my view, may continue to become stronger. Rupee may depreciate, may not depreciate, depends on how RBI controls it. So what are the good options to look at US market? So there are various options in US market. Number one is you can think about studying more about the broader indexes. For example, Nasdaq, S&P, Dow Jones. For example, I have spoken about Nasdaq index on my channel already. If you understand the themes, you can go for some themes. So for example, AI themes or semiconductor theme or cloud computing theme. In fact, very recently I created a video on AI theme, talked about 3 ETFs that are operating in that particular space. So go and watch that video. You're going to learn a lot. On my channel, you will find a lot of quality content. At least I call it quality content. I'm not sure whether you will like it or not, but give it a go. I'm sure you're going to learn a lot on my channel. So please consider subscribing. Hit the like button. Let me know in the comments a simple thank you. Your gesture motivates me to do a lot of research for you and bring quality content nicely packaged in 15 minutes of sort of a video that you will find valuable, insightful. I hope you enjoyed this video. If you did, hit the like button. Let me know in the comments whether you think, can rupee depreciate and can it hit the 100 rupees mark against $1 US? Of course, none of us want that to happen, but let me know what is your view. Would love to read your comments. With that, I hope to see you in my next video. Until then, keep rocking.